It's the interview series. The interview series. It's the interview series. The interview series. It's the interview series. The interview series.
All right, welcome to another episode of the interview series. Really excited to talk to a friend of mine, Chris Slayton, mortgage broker at Task Mortgage out of Windsor. First time on the podcast, Chris?
The first time I've ever been on a podcast. Yes, you got it.
I love it. This is actually my first time doing a podcast via Zoom, man. So I'm excited to just really get to know you and just talk about your journey and what you do and your insights. You're very intelligent and educated. So I think the audience get really good insight from you. So really just, let's talk about, what you did prior to jumping into the mortgage game. What's Chris's background?
Yeah. So, on my end, I was a kind of a classic accidental banker, right? And what I mean by that is, you graduate college. I graduated college in 2009, not really knowing what I wanted to do as a career, thought about going to law school and, just didn't. And then I ended up getting a job at US Bank as a kind of entry level banker. And then from there, worked my way up, got into, I was a branch manager for a while, and then business banking and then private banking, until I eventually left, 3 years ago. And, so I've been in the financial industry, since I was 23. I'm 37 now, so almost 15 years. But I kind of got to a point where I didn't really want to work for the fifth largest bank in the country anymore. And I love US Bank. I love the people there. I love kind of everything I learned over there. But end of the day, I kind of wanted to move on and do something on my own. And the mortgage world allows that. And you and I have a pretty similar path there, right? Because you were AT&T forever and kind of kept on working your way up, kept on getting promoted. And so, well, we've talked about this plenty over the last couple of years where different industries, different world, but still working for huge companies and getting promoted a lot and advancing, but just kind of getting to that point where you're ready to not do that anymore.
Yeah, no, for sure. We have talked about it before. I think going, there's something about working for yourself where, you have that comfort and that brand backing, right? Whether it's AT&T or US Bank. Whereas when you're kind of go out there on your entrepreneurial journey, it's a lot different, right? But you feel, maybe I don't want to speak for you, but I know we've talked, but like you feel a little bit more free, but at the same time, it's always on you now, right? It's on what you do and making sure that you kind of find your business, and you can't really rely on you have a brand still, right? Because, whether you're with Task Mortgage or I'm with Accelerate Real Estate, you have that a little bit, but it's on you to market your business, prospect, when you work, how often you work, how long you work, and then what you get out of that, right?
And truthfully, you hit on something there about freedom. As weird as it sounds, I actually feel less free working for myself than I ever did working for a huge bank, right? Because if working at US Bank, if I was away and on vacation, I had a backup. I had somebody else that could help me out. I could, or I could just be on vacation and deal with it whenever I get back, right? But doing this sort of work and being self-employed, a lot of the time I am the start and stop with a lot of that stuff. And so but the flip side of that is the freedom that comes with your downtime, where I don't need to be at a certain place at a certain time. I can structure my day however I want to, but there is that kind of ebb and flow where I've made a trade with freedom, right? Where, there's times where, being perfectly honest, where you don't necessarily want to mortgage lend, but if that phone rings and you got to talk to a client and you want to, you got to get a pre-approval out or whatever it may be, you have to work, right? And so it's a lifestyle choice, I guess, is the easiest way to to put that, where I would prefer that trade versus, you know, the oversight and the management that comes from working for a large company.
Yeah, no, I think I don't want to call it a facade because that might be the wrong terminology, but um, I guess just the definition of what someone would think freedom is when you're working a regular, like, not your W-2 job, 9 to 5, and then thinking, oh yeah, you can set your own time, your own schedule. You're right. I mean, you really find out what freedom is, um, and what kind of boss you are, right? Because you're essentially working for yourself. And if you want to get something out of that, like, you have to set your own stuff. And so you're right. You actually, I echo that sentiment, right? I definitely feel less free. I feel like I was putting in, it's not about me, but you're right, because I was putting in 100-hour work weeks with AT&T. And then I was like, man, if I put 100-hour work weeks into my business for, something's got to come out of that. Now I'm working more than that, because if you're awake, you're working, right? You're thinking about what you need to do. If you're asleep, you're probably not getting much sleep, depending on where you're at, especially at the beginning, right? So you're right. As far as feeling less free, I'm right there with you, man.
Well, and some of it's, I look at how I structure my day now versus when I was working at US Bank, right? So I've always been sort of an early riser, but getting into mortgage lending, afternoons and evenings are kind of when I do a lot of my work, right? That's where you're talking to clients a lot. That's where you're talking to agents a lot. And so, for me, Monday through Friday, I get up at 5 so I can go to the gym, and that's because I know that in all likelihood I'm not going to be interrupted from 6 to 7:30, right? And so you just kind of start to learn to carve out when when you're going to be free, and so you start making adjustments to your life based off of how this industry works, right? If I tried to be in the gym from 5 to 6:30 every day, well, I'd probably be working most of that time and not getting a great workout. And so you just kind of you end up having to flip that around a little bit, and so you just make little tweaks that do give you that time in the day. But that's kind of one of the big things I've learned is you just got to be flexible with how you structure your day working in this industry, because it's not, a lot of the time you don't know when you're going to be working, as weird as that sounds.
Yeah, yeah. What would you say? And you kind of answered it already, but I'm asking anyways. What would you say was the sole reason why you made the move from U.S. Bank more to the lending space, task mortgage?
Yeah. So, I've always been a lender in some capacity, and so the background was there. Uh, but the big reason I wanted to go out on my own is really just to kind of know whether or not I could do it. Truthfully, I could go get a client manager job at a bank within a couple months if I wanted to, right? Because I've done it for so long. I know how to do it. It's not, those jobs are good jobs, right? But there's plenty of them out there. There's plenty of banks you can go get that job at if you have the background. And so for me, I actually liked the challenge of, going out on your own, walking away from a base salary and just seeing if you can do it, you know? And so it's actually probably the thing that's going to keep me in this business is you're really only as good as kind of what you just did, but you also need to keep going, because it doesn't, you know, your last month doesn't mean anything for your next month. And so there's that constant change and constant having to go out and prove yourself every day, every month, that I really like about this industry.
Yeah, and I mean I smile because it is very similar to my journey, and just when I hear you talking about it, the few words that come to mind is well, resilient might not be the first one, but courage, right? It takes courage to leave what's comfortable, right? Normal, paycheck every 2 weeks to being unemployed every day and trying to figure it out. Um, what would you say was your biggest, I guess not the biggest, but how would you say that that transition was for you from going from, what was comfortable, getting paid all the time to, man, I don't get paid until I get clients and everything goes through.
You know, initially when I got into the mortgage business, the timing was actually really good, right? So I left US Bank early in 2021 when rates were low and a ton of business to go around. And so I'm grateful for the timing, right? Because I had a softer landing, giving up a good base salary coming into this business because there's so much business to go around. That said, where I really felt kind of the struggle of that decision was going into, I would say, kind of middle of 2022 when transaction volume dipped for everyone, not just mortgage lenders, talking about real estate agents as well. Um, and having to go out and find business to at least kind of keep you in the life that you've already built for yourself, right? Where, when I left US Bank, I have a mortgage, I have, other debts out there. And so those payments don't stop just because you stop making money. And so I think I was blessed with the timing because it did allow me to come into this business really when it was probably at its easiest. And I think the real challenge for me was 2022, where seasoned loan officers were struggling to track down business, right? And so how do you as somebody that, yes, I've been in the financial industry forever and I have a ton of clients, I have a good book of business, but how do you go out and differentiate yourself from people that have been doing it for everybody that everybody knows? And so I think that 2022 was the hard year, and then last year was a great year. I really enjoyed last year, and I it was a challenging year, but the uncomfortable year for me was probably 22, not last year or not 21.
Yeah, yeah. What would you say? I mean, if you could share, like, where's Chris going to be 5 to 10 years from now? What are your goals? I mean, I'm always constantly thinking about what I'm going to do and the goals I have and where my business is and how many clients I want to serve and all that stuff. I'm just curious from a mortgage broker's perspective, like where's your head at with that?
You know, it's actually a great question because I don't even know if I know the answer to that, right? Because I'm so tunnel vision with what's in front of me and what I can control, right? So I'm talking days, weeks, months. The only thing that I do know, 5 years from now is my life's going to look a lot different than it does today. But as far as big picture goals, it's just to kind of keep building my business and keep, doing a lot of the good things that I do day to day and just try to be a better person and evolve as a human being more than, the financial goals, they take care of themselves if you do good work. I'm a firm believer in that. And so, um, if you ask me what life looks like 5 years from now, it's probably going to look pretty similar, but also very different, right? I believe I'll be in this industry probably the rest of my career at this point because I look at getting out of or getting through 22 and 23 and continuing to build my business and being in a good position as we head into 24. I don't know that there's well, I should leave this business. I think this is no, I'm going to keep building my business and I'm enjoying this business. But outside of career, everything is kind of up in the air as far as I'm concerned, right? I do believe I'll be in Sonoma County, I'll be a mortgage broker, but everything else is just kind of a one day at a time thing and see where it takes you.
Yeah, yeah. Speaking of business, what I mean, I'm not necessarily asking predictions, right? We talk about all the time. We in our meetings every Monday. You give uh, a mortgage update, right? Am I saying that right? A lender update.
Yeah.
And I think I'm asking for you to do the same here, but not necessarily update and where we're at this week, but just your thoughts on where we are from a lending perspective, in January right now, and then also going into the rest of the year. What you're hearing out there, what it should look like, and it'd be interesting to go back. This is not something that like you can't predict the future, but things that you hear Because I know you're always keeping your ear to what the Fed's talking about. So I think it's interesting to maybe highlight and document what you think the year is going to look like, and then we'll see what going this time next year we'll go back to this episode and think about like, oh man,
Yeah.
that was off or that was on. So what do you think the 2024 looks like going into 2025?
Yeah. So I think that I guess one of the things that I look at is to not over predict, right? And you work with what you have at your disposal, which to me, if you're lending in the sixes, which is where we are now, it's a much more manageable rate than sevens and eights as far as payment goes. And so for from my perspective, where we're at, even that small correction in rate has benefited my business because you have, you know, even just across Sonoma County, you've got thousands of people that couldn't do a loan in the sevens that now can do one in the sixes. Now, whether they want to or not, because of the payment, is up to them. But there's that side of things that gives me optimism, and it sounds like the Fed has hinted, they haven't fully committed, but they've talked about lowering rates this year, which should be good for our business in theory. But the bond market operates separately from the Fed's overnight policy, right? So in theory, you could have the Fed lowering rates on the overnight and bond rates go up, right? And so in all likelihood, if they cut rates are going to go down on mortgage loans. But uh, there's always some unpredictability there, right? Where you don't know for sure. But I do think we're going to see rates in the fives at some point this year. But it kind of depends on the data, right? You get into April and all of a sudden, if we have inflation at 5%, well, the Fed's probably not cutting rates, right? And so it's a one day at a time thing. I do think that we will eventually get into a friendlier rate environment, but it's not a I've kind of learned after what happened through 22 and most of last year that you can sit there and say, oh yeah, we're gonna see low rates this fall. End of the day, you put your neck out there and say that, you're probably going to be wrong, right? And so it's a balancing act on that, where just because I think that this year we may have rates come back down, it's going to be data dependent. It's going to be based off of information that I don't have, right? And so that's the thing you look at. But all indicators do point to rates coming down. How far they go, tough to say. I think the 2.5-3% mortgage rate, frenzy that we had in 21 and 2020. I don't know that we're going to see that anytime in the next decade, but I could be wrong on that too. But we do kind of know how that happens. It's things like 2008, it's global pandemics, right? So not great things have to happen for us to get into that sort of rate environment. And so that's the other side, is, do we want rates that low? Because something catastrophic may have happened, and it's a careful what you wish for thing.
Yeah, for sure. No, that's good. I have a question. Have we talked about it before? I'm not even sure, but obviously you deal with the with the clients that are trying to figure out their finances and their interest rate and what payment they're comfortable with. And then I deal with obviously showing the homes and all this other stuff. And I can talk about a little bit of the numbers, but it comes down to, I guess my question is, how do I ask this question? It's always tough, right? I guess, Chris, from a lending perspective, why do you feel like people wait until their interest rates drop to jump into it versus when it's less competitive and interest rates are higher? From your perspective,
Well,
you have conversations all the time as it relates to, okay, well, interest rate is booming, the business is booming, and then all of a sudden everybody jumps in, and then when it's slow, which is in my mind, what I'm telling my clients, that's when you should jump in, and then you should wait for the interest rates to dip. And there's your competitive advantage, right? What's your take on people waiting for interest rates to drop and essentially overpaying for a house, potentially, right, with low inventory and high demand, versus less competition with higher interest rates, and then waiting from that perspective? What's your take on that?
Yeah. So my perspective on that, and some of it's on us as lenders to have that conversation, but it's really about what sort of payment you're comfortable with more than anything, right? You can talk about rates and, you know, you and I talked about this briefly yesterday, where rate means nothing, right? It's a number. It's what monthly payment can you take on comfortably, right? And so it's there's some sticker shock there where, even if you're like, I did an FHA loan in December, and it was a $550,000 house, 3.5% down, and that monthly payment was close to $5,000 a month. And so you look at that number, and you know these folks, the payment fit their budget. That's a big number for housing, right? And so you have to look at it from the other perspective of, just because you're able to take on that sort of payment, what are you giving up to make that happen, right? If you know that you can go rent that same house for $3,000 a month, you're essentially giving up $2,000 worth of disposable income to make that trade, right? And so to me, it's more about personal budget and whether that sort of obligation makes sense in your day-to-day life. Big picture, it should always work as long as you're able to make the payments, right? If you buy a house now, you live in that house for 30 years, you pay off that loan, the house should appreciate. And worst case scenario, even if it doesn't, you have a free and clear home at $550,000 that you've paid off, right? And so it is a big picture. From a big picture standpoint, it works, but it's also a personal budget thing, and it's a how comfortable are we making that sort of commitment to that sort of payment, with no guarantee that rates are going to come down, right? And rates will come down sometime in the next decade, right? But it's also you don't know when, you don't know how, you don't know if you're going to be able to qualify for the refi when rates do come down, right? What if you lost your job and you're having trouble making the payment, and rates all of a sudden, like, oh, that 6.875% FHA loan I did, well, I could do it at 3% now, but I'm not employed, right? And so there's a lot of variables there that I don't know that we as lenders do a great job of communicating just as a whole, and when I talk through this with clients, I actually lean on, when I was at US Bank, I had all my investment licensing. It was part of the financial planning process with the advisor that I worked with. And a lot of how I present a mortgage loan to somebody is, well, it's a planning based approach, right? Where does it fit your plan? Does it fit your budget? Big picture. And so, I think that's one of the things that has allowed me to actually do pretty well in this environment, is not trying to use car salesman my way into somebody taking on a mortgage, right? It's more about the big picture and communicating the risks, right? Because there's risks. There always are. But I don't know if that quite answered your question, but that's kind of my thought on that.
Yeah, no, I think the accountability on the lender perspective is smart. It's a good, there's lots of variables when it comes to that. I think you're right. And I think I like your approach as far as planning it out, making sure that there is some type of plan that's within their budget. I mean, I'm also a client, right? I'm also looking to buy, right? So I'm not doing this to get a sale. But if you're looking to, if a house is $700,000 at 3%, that thing's going to eights, easy,
Right.
850 maybe, which is crazy,
Yep.
right? Versus if it's like 7%, I think it might go 699 to 715, you know? And so I guess I'm just thinking about, when you think about the plan, if you're thinking about the long term, I'm always just looking at the long term, and that's all. Like, you're right, it's unpredictable. Are they going to be employed to do the refi? Is the rate, how long is it going to take the rate to go down? All that good stuff. I guess I'm looking at it from the other perspective, whereas like when I jump back in and buy my next house, yes, the payment is going to be a key factor and indicator, but also how, when I do buy the house, what's the likelihood of me lowering that payment? And if I get it at a low interest rate, the likelihood of me lowering that payment is going to be way less, and way pretty much zero, right? If I get it at 3%, which who knows if that's going to happen again, versus if I get it at 5 or 6%. Well, five, it might not go down lower than that for a while, but at 7 or 8,
Yeah.
I get the payment is astronomically higher than it would be at like 5% versus 8%. I totally get that.
Yep.
I'm just, I think I think realtors also can come across like a used car salesman too, trying to push them into homes at 8%. But I think the reason why I've communicated to my clients about the 8% is because look at how many offers there are compared to what they're going to be when, when it's hell, even 5, when it gets to 5%, it's going to be a frenzy, you
Well,
know?
and you are dead on with that, right? So historically, the best time to buy is when other people aren't buying, right? Like it really is the truth. But it's also, it still kind of goes back to, does it make sense for me to buy a house in this environment at this rate? But to your point, rates go down significantly. In theory, your home should appreciate pretty much right away because there's going to be more buyers, there's going to be more activity, more competition drives up prices. Unless you have something catastrophic like a 2008, which that's a kind of a once in a lifetime type thing, in my opinion. I think there's other things that can impact the economy negatively, but I don't know that housing is going to be the issue going forward, just because we are so regulated and there's so many rules with mortgage lending. Um, it's tough to do a mortgage loan, right? You've been through the process yourself, right? And so you know what that looks like. There's no just walking into my office and saying, "Hey, I want to do a loan," and I say, "Oh, here you go, here's your money." You have to jump through a million different hoops, and I think that's actually a good thing, big picture. Uh, but it's also, it's a pretty intensive process these days, uh, which I think puts us in a good position to avoid defaults down the road, right? And so, uh, point being is that, yes, this is to me a better time to buy a house than middle of 2021 would have been, because you have choices, right? How many different times did I write pre-approval letters where there was 20, 30, 40 offers on homes that went for 50, 75, 100 over asking? And sure, the payment is great, but did you get the best deal in the world? You know, the home would have appreciated from when you bought it. But compared to what you're seeing sellers give away right now, and the ability to negotiate on price, I think it's a different environment. I think it's big picture probably a better environment to go buy a house, even with payments kind of being what they are.
Yeah, yeah. Um, was gonna say, I'm going to, not to give all my secrets here, but I'm gonna be interviewing and doing more podcasts with realtors, not in the local area, but I think I told you already, but out of state. Um, and so I'm curious, what's your experience with lending and doing things outside of California, whether it's Florida, Tennessee, Texas, Oregon? What are your thoughts on purchases outside of the local area of obviously Windsor, but just California in general?
Yeah, so I actually have a unique perspective on that, right? So when I was a branch manager at US Bank, I worked in, I worked in Chicago and I worked in Milwaukee, which are completely different animals than California, right? My branch in Milwaukee, the average home was selling for like $75,000 there. And this was,
Yeah.
I guess, like 2012 maybe. So, over a decade, those homes probably would have doubled by now. But you look at those price points versus price points here, and they're completely different animals. And the way people take on debt is very different, right? It's very common here for people to do 3.5% down or 5% down when they're buying their first house. Out there, if you're buying $100,000 house, you're probably putting 20% down or more, right? And so it's a California is its own different animal with real estate compared to some of those other places. Uh, but it also, I think, working in those environments and those markets gave me a unique perspective because we as an industry like to complain when our transaction volume is down and we're not making as much money, and but you think about transaction volumes being down across the country, and you think about LOs and real estate agents out in a place like Wisconsin, right? You're doing a larger loan out there would be 150, $200,000, where about the smallest loan I do, or and there's always one-offs, but about the smallest loan I ever do is like $400,000, right? And
Yeah.
so there's
On a condo.
yeah, no, and that's exactly it. So I think we're, as California lenders and agents, we tend to complain a little bit more when it's tougher. And it's like, well, it's all relative, right? That one loan that I did at 400, well, it takes one of my peers out in Wisconsin, it takes them 4 transactions to make the same amount of money as I did on that one loan, right? And so I think we get caught up in kind of the tunnel vision side of it, where it's like, oh, business is tougher and this and that, and it's like, well, we also work in the best market in the country to do this sort of work, and so I do think that's helped me in this environment as well too. Is kind of just knowing the difference between California and other places, and knowing that as stressful as this work can be, we are in the easiest market in the country. We really are.
Yeah. No, that makes sense. I get that. Are you able to originate loans for out-of-state loans?
I am not. When I was at US Bank, yes,
Okay.
because I bank. So I my NMLS license was issued to me when I was 23 years old at US Bank. And banks, they issue, federal mortgage licenses where you can lend basically any place the bank wants to lend. With working for a broker like I do now, I have a state mortgage license and I have a real estate license through the state of California. And so I am pretty much California only. I can do some non-owner stuff out of state. I don't really have any desire to do that. I prefer to just kind of stick with California and just kind of focus on what's in my backyard, and everything else I tend to I tend to connect back to bank guys if it's like, well, I have somebody that wants to buy a house in Colorado. It's like, well, talk to Brian over at US Bank because I know he can do it. And so it's some of it's just kind of knowing my lane and just sticking in it.
Yeah, that's fair. That's fair. I it was more so for me than anything. I'll be mindful of time too. Probably got about 5 more minutes. What any other insight that you feel like you want to share? Or what are your thoughts?
No, I mean, I don't have a ton really. Like I'm truthfully happy for you, kind of knowing that you're still here actually after kind of making a similar decision that I made, right? And so uh that's been a fun part of this process for me is seeing, Jeff's doing well. He's building his business and keeps on closing deals and pushing forward, knowing that like our timeline was pretty much exactly the same. You left AT&T in 2021, right?
In April 2021, I started October of 2021 in real estate.
Yeah. And I left May of 2021 from US Bank. So the timing on that's pretty much exact. So I'm glad you're still kind of firing away and building your business. And I for me, I think I'll always kind of think of you as time goes on, right? You look at that, 20 years from now when you're in 2040, it's like, hey, remember when we left those big companies the exact same time, right? So like
Yeah,
I there's always going to be some sort of connection there that I love with you, right? Because it's
yeah,
similar story, similar background, and making a move like that basically the exact same time.
yeah, yeah. It's pretty identical, and yeah, no, it's. We'll see what happens in 20 years, man. I think yeah, it's just it's I still feel like I'm in the and you I'm sure you do as well, but I still feel like it's still relatively new. But you're not, right? You're still it's like every day is day one. So you're constantly, at least for me, you're constantly trying to figure out and reinvent yourself and find out what works, what didn't work. But ultimately you're not there to sell anything. You're there to build relationships with people. And I think that's what slows me down and reminds me of why we do what we do, right? We're here to help people.
Yep.
It's not on our timeline. No one cares what we want and when we want it. So once you remember that, it's okay. Ask qualifying questions, find out what they really need and want, and then reverse engineer the client's needs, and then we can help them from there.
That's exactly it. You work for the clients, they don't work for you, right? And so you just kind of keep that in mind and you be a resource and you're on top of it when they need you to be on top of it. And everything else just kind of takes care of itself.
Yeah, man. Yeah. Well, if you don't have anything else, man, that's it. That's all I got. That was easy, right? First podcast ever. You ready for your second and third one now?
Yeah, we'll see on that,
I love it, man. I love it.
Appreciate the invite and yes, I would be glad to join a next podcast.
I love it. I love it. I always do this at the end, like where you got an Instagram, right? I can always flash this up on the screen at the end. Yeah, Instagram is that. I mean, I don't know if you like people to know that.
Man, I am the how do I put this? For a 37-year-old, I am the lowest tech person you're ever going to find, right?
Yeah.
I work for a very old school broker that we still use a lot of paper files and obviously we have computers and we have cell phones and all that stuff, but I very simple, right? I've got a LinkedIn page, so if somebody Googles me, they can see my work history and they can see that I work over at Task. But other than that, it's. I mean, we barely have a website here, and it's all just kind of cell phone, email, word of mouth, in person. We're kind of an old school relationship based broker, which for me is where I need to be. It's a because that's truthfully that's what I grew up with at US Bank. US Bank is not US Bank is not a bells and whistles bank. It's a kind of a boring Midwestern bank that doesn't have a whole lot of technology, but they do a lot of great things and they do it the right way, but without a whole lot of those, fancy tools, bells and whistles. And so the best way to find me is looking me up, reaching out. Yes, I do have an Instagram. I don't know my username. So
Don't worry, I'll
I'm
tag you. I'll tag you. I'll find you and tag
okay.
you. I'll create a short and then I'll tag you on the video.
All
So,
right. Appreciate it.
but yeah, no, I appreciate your time, man. Thank you. And yeah, obviously we'll be in constant conversation, but I appreciate you being the first Zoom podcast that I've had. It wasn't too bad. So
Yes, sir.
thank you so much, Chris. I really appreciate it.
Thanks for having me. Talk to you soon.